Hello traders, good afternoon. My name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and this is Daily Analytical Report. Half an hour webinar where I will tell you what's going on the markets, and together we will try to look for decent trading occasions on the Forex, on commodities, shares, and other markets. I guess that the main, today, now we have a continuation of the movement seen yesterday, so risk on mode. The shares are climbing higher, emerging markets currencies are a bit stronger, and safe havens are going down. One safe haven that is doing well, the only, I guess, on the market right now is gold, because gold is having a very bullish technical situation, which I will show you in a second. From the calendar point of view so far, well, the calendar was packed, but I would say that the most important news today was a rumor from Reuters that they said that a strong euro is worrying a growing number of ECB, European Central Bank policymakers. Euro concerns increased chance of delaying QE decision or a more gradual exit from asset purchases. That's the story from Reuters, which affected euro dollar, and after that euro, well, not only euro dollar but euro in general, which is now weaker. Let me show you the economic calendar, because yesterday and today we got pretty important numbers. First of all, yesterday you saw that we got a very good data from United States, and that's one of the reasons why American dollar was much stronger yesterday and stronger today. We got excellent ADP number, 185,000 was expected, and we got 237, and the GDP was very good. We can see that GDP came 3% and 2.7% was the consensus. Also, we got data important for oil traders, but the reaction was mild. So actually, we got a decline in storage much bigger than expected, but it failed to lift the price of oil higher. Today in the morning, we got data about retail sales from Germany, which also helped to drag euro lower. We got an employment change in Germany, which also influenced euro negatively. CPI came slightly better than expected, but it failed to lift the euro higher, because we are under this influence of this rumor from Reuters. In 26 minutes we are waiting for PCE data from United States and GDP from Canada, so definitely American dollar to Canadian dollar will be influenced. But obviously we are waiting for non-farm payrolls, which will be shown tomorrow. So after this data is finished, it will be digested, we will see some movements, and after that our eyes and our attention will shift towards the non-farm payrolls, which will be shown tomorrow. And with the recent ADP, we can expect that maybe this number will be a bit better. So now we can start with the charts. We can start with cable, why not? This is the remain of our position on a live trading account, on a real account, and you can see that this decision to close the position here 2 days ago was spot on. I had a long position on cable, I had in the same time a long position on euro dollar, which I also closed here. Now the price is almost 200 pips lower, so that were good trading decisions, definitely. That was a good trade. But let's come back to the technical situation here. So currently the price is drawing inverse head and shoulder formation, where we have a left shoulder head and a right shoulder here. So that's a bullish pattern, most definitely. But for this to have a buy signal, we need to break the 23.6 Fibonacci level. So far, 23.6 Fibonacci level. For that, they need to bounce here. But maybe they will try to test the 38.2 Fibonacci here. We will see. So far there is no buy signal, obviously. That's just there is just a potential to draw a right shoulder, but only with that you cannot buy. You just cannot buy because there is no buy signal here yet, and there is definitely a bearish price action here with this drop. Now we are approaching midterm support, which will not be so relevant as this one, as 38.2 Fibonacci. So on cable we don't have any important signal here yet. On euro dollar, this reaction after this rumor and influence of that weaker data. You can see that CPI was ignored almost entirely. The price broke 23.6, 38.2, 50% Fibonacci retracement of that area, and now we are heading to an important support created by 3 different technical factors. So first one is a correction equality pattern, right? This alone never should be an important support, right? That can be only an addition. This correction is now, in terms of the depth, the same as this one. Also, what do we have here is the last important Fibonacci, so 61.8 here. But foremost, the most important from this 3 is the neckline of this inverse head and shoulder formation, and at the same time a horizontal support respecting recent price movement. So it was a support here, resistance here, here, and after here resistance, and it's the first time that we're gonna test this as a support. Only the fact that we are touching this level shouldn't be a signal to go long, because to go long, what you would like to get there is a bullish price action. So far we do not have any bullish price action, so the price looks like it's penetrating this level. So we are on a daily lows. Yes, on a daily lows, well, this will create a very negative weekly candlestick. As you can see, this weekly candlestick can be a trigger for a bigger correction on the euro dollar. But as long as we stay above the long-term uptrend line, which is here labeled with the green color, the sentiment is definitely positive, right? Because there is an uptrend. And in every uptrend price, use the long-term uptrend line as a support. That's not a surprise here. Okay. Now, next instrument, which is S&P 500, and here, well, you remember from yesterday, from 2 days ago actually, we were talking about this bounce from the long-term uptrend line here. So that bounce did not happen in a random place. but in a closer look, what we had here is this inverse head and shoulder formation and a flag formation here. So we broke the upper line of the flag, we went higher, we bounced off the upper line of the flag, and that bounce, so approval of this level as a closest support was a strong buy signal, because that gives a confirmation for the bullish sentiment here. So the price went higher, broke the first resistance, local one, is now aiming for the second one, but they shouldn't have a problem with a breakout here. I think that the most probable scenario here is the price aiming this resistance, so 2482 points, with a potential to set new all-time highs. Probably it won't happen this week. Well, we'll see what the non-farm payrolls data will be, but let me also it does not have to happen this week. Maybe it will happen next week, but with this breakout of the neckline and the upper line of the flag, and with this bounce from the long-term uptrend line, the sentiment is definitely positive. It sets the positive sentiment for this week, for the next week, and maybe for the next week as well. So the chances that we will set all-time highs, new all-time highs, the chance for that is really high. And gold seems pretty resistant to this escape from safe haven assets. Why is that? Well, the main reason is that because they are doing everything to protect this long-term support around psychological barrier of $1,300 per ounce, which is important for the price of the gold since the May 2016. It was a resistance here, support. After the breakout it became resistance, and after the breakout it becomes support. On the daily chart, buyers are now drawing a very positive candlestick, which is a hammer. And hammer in an uptrend, because there is an uptrend, hammer in an uptrend bouncing with support is a very strong buy signal. Let's see if this hammer has chances and how it was created, and we will get another buy signal here, because the price bounced here, created V-shaped retracement, and look, this correction is almost the same as this one and this one. So this one was a bit smaller, this one was a bit bigger than that, and this one is the biggest correction, but still that's I would say that it's the same range, so we can name it a correction equality pattern, those three. So the sentiment for me in gold is still positive. Maybe they will try to test the support for the second time, because it's often it happens very often that the price tests support 2 times or 3 times before reversing. Sometimes it happens once. It often happens with V-shape pattern, but usually it's done twice or 3 times. So we shouldn't be surprised if the price do that here in this case. But the thing is, to wrap this up, the thing is, as long as we stay above $1,300 per ounce, the sentiment is positive. New Zealand dollar to American dollar. Here, finally this head and shoulder formation worked. Left shoulder head and right shoulder. Before breaking the neckline, we had a flag. A flag is a trend continuation pattern, so we broke the neckline and we broke the lower line of the flag, and now this pair is going lower. Also, we went inside. I don't think this support was relevant here, so actually we can remove it. Here I would label it like that. The sentiment is negative. It's kind of a double bottom formation here, and we should soon test the lower line of this correction pattern. So for me, the most probable scenario is a decline, and decline naming this black line, which is 180 pips, 180 pips lower. Or to be more precise, I'll just move that here, 150, let's say 150 pips lower. That's the most probable scenario for me on New Zealand dollar to American dollar. Now let's look on the dollar index, because dollar index was aiming a very important resistance recently, well, hour ago, and that resistance was created by a neckline of this head and shoulder formation and by the downtrend line. And you can see that it was respected in the terms of, well, we had a bounce and then a breakout. We can see that this level was respected because the breakout is strong. What it means is that when you have such a strong breakout of resistance, it means that many traders had their stop loss orders here. So a stop loss for a short position here. So they were opening short, and they had their stop loss orders here. And a stop loss activation increases the momentum here, and the price is going higher because the stop loss for the short position is a long position. So this is a V-shaped retracement. This is classic V-shaped retracement, and actually with a breakout of this horizontal resistance and downtrend line, that creates a nice buy signal here. So American dollar can be stronger, which actually questions this support here, and which actually opens a way to test the $1,300 per ounce one more time, because stronger dollar will definitely affect euro dollar. But the thing is also that gold seems pretty strong. The demand for gold is pretty strong because, as we can see, American dollar is much stronger, and despite that, the gold is on relatively high levels, which shows us that stronger dollar do not affect the gold so much, or affects it, but it's overwhelmed with the demand for this precious metal. Silver is doing a bit worse, but they are also defending horizontal support. Here maybe a white area like that. As long as we stay above this and this downtrend line, the sentiment is still positive. American dollar to Japanese yen, that was a nice bounce of this horizontal support. So actually this breakout from this triangle can be considered fake, so we can actually remove this support, this resistance or support, because it's not relevant and the price is not respecting it. What we do have here is a resistance, what we do have here is a support. There is a support here. So the closest resistance is this green area. I think that the sentiment now on American dollar to Japanese yen is positive. When the price was here, it was negative because we had the pressure on that support, but that support was defended. As we can see, the price is advancing higher nicely, so we should respect that, right? American dollar to Canadian dollar. Here we bounced off those lows from the end of July. The price has a chance to create a double bottom formation. It won't be the best double bottom formation ever because the second bottom is not lower, is higher. What we are having here, well, we are waiting here for this data about the GDP. In the meantime, when we are waiting for this data, you can see that the price broke the downtrend line here. So the sentiment maybe it's not positive, but most probably we'll test 23.6 or even 38.2, where the real test of the sentiment will be. But for now, there is no trading signal here, at least for me. Euro to Japanese yen. Although safe haven assets are on a back foot, you can see that Japanese yen is gaining strength here because euro is much weaker after this story from Reuters. So now we are challenging the first local support created by those tops, and after the breakout by that support. And there is also here, let's say, this support. Now we still have some place to this uptrend line. Actually, we can measure how deep we can go with Fibonacci as well, and it's nothing bad. We didn't even test the 23.6, but also look at here, 38.2 looks promising here in terms of the potential support. Euro to Australian dollar, this breakout of the neckline, inverse head and shoulder formation, is not the best breakout you could see in your life, or you will see in your life, because the price fails to advance higher, but it's the same situation, so euro is weaker across the market because of this. Actually, it's a speculation, so we can name it a speculation. American dollar to Swiss franc, it shows us the reverse. It's a combination of stronger dollar index, higher dollar index, and a reversal from safe haven assets, which is represented here by Swiss franc. Now we do have a double bottom formation here, but there is no buy signal yet. Buy signal will be created once we will break the red line. Australian dollar to American dollar, here there is a kind of sell signal created because we broke the downtrend line, the uptrend line, and also in the same time after the breakout that was broken, and we tested that as a closest resistance, and now the price is advancing lower. They stopped on the local support here. So before testing for 23.6, sellers has to break this level, but well, here we had a buy signal, right? Now we are more or less on the same levels, but there is no buy signal here whatsoever, mainly because of the fact that we broke this neckline. So if I had to, well, for me there is no signal here yet, but if I had to trade, I would go short here. American dollar to Mexican peso, no trading signal for me. Here as well. Here. New Zealand dollar to Japanese yen. Here as well, no trading signal. Actually, I can remove this. American dollar to Polish zloty. Look how they use this horizontal support for a bounce beautifully. And maybe we'll have first bigger correction this year, because this year we're mostly going lower. And the first potential correction here can aim 370. That, in my opinion, can be a strong resistance here and can slow down the upswing. WTI near weekly lows. We got this hurricane Harvey. We got better data, and all of that failed to lift in the price of oil. It's going according as exactly as our expectations were telling us. We were writing many analyses that the price of the oil should decline. Okay, we can set this trend line here, and this one is here. it's a kind of a wedge. So optimists can still say that there is a potential for an upswing. Fair enough. I'm a price action trader, so I trade what it is, what I see, and I would go long once the price would come back above 38.2 and once the price would break the upper line of the wedge. Because so far I do not see a buy signal here. For me, there is no buy signal here on the oil. As long as we stay below 38.2, there is a sell signal on oil, in my opinion. 3 instruments left: euro to British pound is bouncing off this uptrend line. But still, even if we break this uptrend line, the sentiment would be still positive, because that still would be just a normal correction. I would like to show you DAX. DAX is not doing so good as S&P 500. They are still below midterm and not so important resistance. In my opinion, this one is not so important as this one. Red one is absolutely crucial for me in the midterm. So even if they will break this upper line of the wedge, that will not change the sentiment here. And yesterday I was analyzing, I was doing a webinar about MetaTrader 4, and randomly I opened this chart. And it has a decent trading occasion here. Why is that? Because that's a daily chart of Canadian dollar to Japanese yen, where we had this massive, huge inverse head and shoulder formation. And actually, the price made an attempt to break the neckline and trigger the buy signal, but they failed. So that's a false breakout. And the price went below, broke one support, second support, and actually this false breakout here, that triggers a sell signal that starts the downtrend. So there is a downtrend and there is a flag. Now we do have a flag. Flag is a trend continuation pattern, so we should expect the lower line of the flag to be broken, which in the same time is a trend line here. So I would say that once the price will break the lower line of the flag and an uptrend line, that will be an invitation to go short, and that will be a sell signal. So I will carefully watch this. Maybe this pair will be influenced in 1 minute when we will have GDP from Canada. We will see. Maybe that will happen. So let me show you those instruments that we are talking one more time. So on euro dollar, finally a bit of reaction here. So there is this hourly candlestick, which is now drawing a bit of long tail, but still that's not enough, that's not significant to open a long position. That can be a decent occasion for short-term traders, but okay, let me do it like that. We will see Canadian dollar to Japanese yen, we will see euro dollar, and we will see American dollar to Canadian dollar. In 10 minutes we'll have this data. Okay, so Canadian dollar is stronger, so that will delay our setup on Canadian dollar to Japanese a little bit. So most probably GDP from Canada was much better than expected. What we're here, we are aiming this downtrend line. And what about the data for American dollar? I don't see a massive reaction here, so maybe the data was as expected. So this setup on Canadian dollar to Japanese yen gets delayed a little bit, but it's still on the table, so we should watch for a potential breakout here on this support. Okay guys, now a short break, and after that webinar about technical analysis. Thanks very much, and see you in a bit.